Is it possible to be approved for a home loan while in bankruptcy? Is it possible to be approved for a loan with collections accounts still showing on your credit? What steps should I take now if I want to own a condo in 5 to 10 years? How can we get around these student loans and become homeowners? Hey honeybees, I'm back and I'm answering your most burning mortgage questions, and I might just be answering your mortgage question. Stay tuned to find out. Hey honeybees, welcome back to my channel, or if you're new, my name is Sierra. I do videos on lifestyle and finance, and I'm a full-time mortgage loan officer. I work full-time as a mortgage loan officer, and I've helped hundreds of people to buy their homes, build wealth, and so I take what I know and I've learned and I share it with you guys in hopes that it empowers you to build wealth also. So for today's video, it's going to be another mortgage Q&A. I get so many mortgage questions on a daily basis, whether it's in my comments, people flood my email, people flood my Instagram. If you've reached out to me on Instagram, you've probably gotten like an auto response basically saying if you reside and are buying in one of the states that I work, to email your question to my work email. If you are not buying or do not reside in a state that I cover, the only place where your question will get answered is the comments, or if I do a prompt on Instagram. I thought I would do a Q&A based on your questions from Instagram because I don't normally answer questions through Instagram. So I thought it would be fun. But just for reference, if you reside or you're buying in the state of Louisiana, Texas, Alabama, Mississippi, Florida, soon to be Georgia, or Colorado, you can feel free to email your question directly to my email address, my work email address, not my YouTube email address, my work email address. All that information's in the description box. If you do not reside or are not buying in any of those states, please leave all your mortgage questions in the comment section below. I just ask that you leave your questions in my most recent mortgage video because that's where I pull my questions from for video ideas and when I do these Q&As. I'm gonna do two parts. One is gonna be strictly questions from Instagram, and then the next one's gonna be questions from YouTube from the comment section. So definitely stay tuned because even if I didn't answer your question, I may have answered a question that you have. I've marked below the timestamps for each question, so if you're more interested in a specific question, feel free to jump around. That information is also in the description box. Super quick shout out to Blinkist for sponsoring this video. In today's day and age with all the technology, it's really hard to just sit down and read a book anymore, unfortunately, but I'm always craving knowledge. So that's why I use the Blinkist app. I'm able to read the most important content of an entire book in about 15 minutes. It pretty much summarizes all the important parts of the book and it puts it all together in a nice little package so that you can read it quick and on the go. Obvi, I'm a nerd and I read a lot of books on finance, but they have books on everything. Some things that I've been reading: Millennial Money Makeover, Investing with Impact. I'm gonna have an investing series, so stay tuned for that. I Will Teach You to Be Rich by Ramit Sethi, Hustle by Neil Patel, Everyday Millionaires by Chris Hogan, The Millionaire Dropout, so many more. And the first 100 people to click their link below will get 1 week free to try it out. And then if you try it out and you like it and you want to get a membership, you'll actually get 25% off of the membership. That is so nice of Blinkist to offer that to my viewers, so definitely take advantage of it. And I'm so thankful that they are helping me bring these videos and this content to you guys. All right, now let's get right into the Q&A. Okay, so if you're not already following my loan officer Instagram, you may want to. I do post little mortgage tidbits and pieces of knowledge for you guys, or when I've uploaded a mortgage video, it's Sierra Foster Loan Officer. And then my lifestyle Instagram, which is everything outside of mortgages, is Sierra Honeydip, if you guys want to go follow and check it out. So like I said, I told you guys to leave me some questions on my last post, and let's go. You guys gave me a lot, so I'm gonna get through as many as I can, and I'm gonna try to keep it short, sweet, and to the point, which is sometimes hard. Okay, so the first question, how can we get around these student loans and become homeowners? That's a great question. So, it's very loaded. There's different ways to get around student loans. One way is to get yourself put on a standard, fully amortized repayment plan. This is beneficial to getting around your student loans because it allows us to use that payment amount versus 1% of the entire balance, which we have to use on most government loans. The other way to get around student loans is to get on a income-driven repayment plan only, and I repeat, only if you are getting a conventional loan. We are allowed to use that monthly payment, that lower payment, with a conventional loan versus having to take the 1%. So if you have a 0-month IDR, we can use that if you are getting a conventional loan. If you pay $10 a month on your student loans, we can use that payment if you're getting a conventional loan. Now, a conventional loan has its own qualifications. I talk about all that in other mortgage videos, so definitely check out my other mortgage videos. I have a playlist if you want to learn more about conventional loans and the different loan types. What steps should I take now if I want to own a condo in 5 to 10 years? If you want to own a condo or really any property, what you can start doing now is essentially working on 3 aspects of your application. One, your DTI, which is your debt to income ratio. You want to optimize your DTI by keeping your income as high as possible and your debts as low as possible. Next thing you want to do is work on getting your credit score as high as possible. I say make sure you're at least a 640, but your goal should be a 720. That's going to get you the lowest mortgage rates, the lowest mortgage payment, the best loan type, and it's going to give you all the best options. It's going to save you the most money in the long run. So a low DTI, so that's meaning low debts, keeping your debts low, keeping your income high, as well as keeping your credit score high. Also, you want to save. Make sure you have as much saved as possible because this is also influential in how you get approved and how much money you get approved for, things like that. Those are the 3 things I would say: DTI, credit score, and savings to focus on. Is it possible to be approved for a home loan while in bankruptcy? Yes, it is. There are certain circumstances where you can get approved for an FHA loan while in Chapter 13 bankruptcy. So it does depend on, what chapter it is. But if it's 13, you can get approved by getting a letter signed by a judge saying that they authorize you to buy a home. You also have to have made all your bankruptcy payments on time for the past year. And then of course you still have to qualify via the other requirements to buy a home. But yes, it is possible. Is it guaranteed? No, but it is possible. Is it possible to be approved for a loan with collections accounts still showing on your credit? Yes, it is possible. I don't advise it, and I would try to minimize your collections, but you can still get approved with collections. I filed bankruptcy 5 years ago, and my credit score is 703 now. Is it possible I qualify for a loan? Yes. So the answer is yes. As long as you've waited the designated time period required for the loan type you're applying for, then you can still get a loan. I would say If you're 5 years outside of bankruptcy, then you should be fine, especially if you have a good score in the 700s, you have a 703, that's good. It goes by your discharge date. So whatever your discharge date is, count the time from that, and that'll be the time period that qualifies you. But I would say 5 years ago, I at least know you could qualify for FHA. I'd have to look at your discharge date to see if you qualify for conventional, but yeah, it's possible to qualify. Is it a good idea to try to purchase a home after bankruptcy and your credit isn't good? And is it possible to work with a realtor on ways to increase your credit so you can purchase in the near future? Okay, so first question was, is it a good idea to try to purchase a home after bankruptcy and your credit isn't good? So yes, it's a good idea to try to purchase after bankruptcy once you've met all the requirements to buy a house. I don't advise trying to purchase a home if your credit isn't good. I mean, it's a main touchstone, it's a main qualifier of buying a home, and you really want your credit score and your credit in general to be strong when you're buying a home, or it's going to cost you a lot of money, or you're not going to get approved. So yes, you can try to purchase after bankruptcy. No, don't try to purchase if your credit isn't good. And is it possible to work with a realtor on ways to increase your credit? So a realtor primarily is going to be involved in the buying process in terms of you putting in an offer, acquiring your property, then walking you through the home buying aspect of the process. There are some realtors who also do credit repair. So in that instance, I guess you could work with a realtor on your credit if you trust them and they're good. Just be careful with credit repair. You got to be careful because there's things that a lot of credit repair people do that will actually hinder you from getting a mortgage. So if you are going to work with a realtor or anyone on building your credit, just make sure that they are aware of what the mortgage requirements are and what your mortgage goals are. That's a big key. All right. Why is the large down payment more important than having a good amount of money in savings for unexpected home repairs? In a way, it feels like I'm being put in a bind by giving a large down payment up front. I don't necessarily think putting a large down payment is more important than having money saved. I think that there's a balance. I think that you should put down enough money where you feel comfortable with your monthly mortgage payment, but also have some money saved so that you can handle home repairs or, any emergencies that come up, or, you got to buy furniture, you got to move. Don't spend all your money on a down payment. Okay, next question. For a first-time home buyer, would it be better to take advantage of the 3.5% down payment in low interest rates, or take chances that rates will continue to stay low and save more? I've been surrounded by save people my whole life, so any purchase seems like a big one. Home ownership would definitely be the largest purchase. You're right, it's the largest purchase of your life. And for that reason, you definitely want to put a lot of thought, research, and all that good stuff into it. Now, for the question, is it better to take advantage of 3.5% down and low interest rates, or take chances? So basically, it sounds like you're asking, is it better to buy when the market is good and the rates are low and you don't have as much saved, or is it better to wait and wait till you saved a lot more money, but you're taking the chance that rates won't be as low? I say the only way to truly know is to talk to a loan officer. So I would say to get a really detailed and succinct answer, you're going to have to talk to a loan officer, because they're going to be able to kind of run through the elements of your application. Like, what does your credit score look like? How much do you have saved? Do you even need to save more, or do you have enough saved already? If you need to save more, they may tell you to wait. Like, there's so many different things that go into that question, but I will say this: rates go up and down. The market to me is never so good, like to where you need to buy if you're not ready and you don't have enough saved, if that makes sense. Wait till you are completely comfortable, you have enough saved, your credit's where you want it to be. Wait and just buy when you are ready in that aspect, because once you're ready to buy, there are ways to lower your rate and to get a low rate, regardless of what the market is doing. So I wouldn't buy just because rates are low. Wait until you're really ready, you're really comfortable, you've got money saved, and then kind of look at what you can do to lower your rate once you're in the buying process. As a loan officer, if someone has enough money to completely pay off their car, bring a large maxed out credit card to 30%, what would you recommend them to do to put them in the best position for a home loan? So I think you're saying if you have a pile of money and you can either pay off your car or pay down your credit card, which would you recommend? That's what I thought this question was saying. If it's not, I apologize. But from what I think you're asking, I would say probably paying off the car, because your DTI is going to be calculated by your monthly payments for everything. Credit cards usually tend to have much lower monthly minimums than do car payments. Car payments can really eat up a ton of your DTI and therefore your ability to get approved and your approval amount. So if I had to pick between those two, I would say pay off the car. Is buying a foreclosed house cheaper, and does it have the same buying process as buying a house directly from the owner? How do you find the right mortgage loan officer broker? Let's see. So foreclosed homes, I don't like them. The process is a lot harder. It's longer. Is for a first-time home buyer, I don't recommend a foreclosed property. It can be done, I just don't recommend it, which is what I think you're asking. It's a lot different than buying a regular home that's not foreclosed. It's the process is gonna be more rocky, it's gonna be longer, and you may end up getting the house or not getting a house. A lot of times foreclosed properties don't get bought because they never get to that point. I've heard horror stories. It can get done though, but I just don't recommend it. And the other question, how do you find the right mortgage loan officer broker? The easiest answer to that is to go by word of mouth. Talk to a few different people who have bought homes, ask them who they worked with, what their experience was, why they would or wouldn't recommend them. So word of mouth really, and then also you want to look up the company online, like on Google, and see what their ratings are, what their reviews say, things like that. What's a good credit profile in the eyes of a mortgage lender? So to me, a good credit profile, I don't know what you mean by credit profile, but I would say having a credit score of 720 and above, no lates on anything, especially no lates in the past year on your credit, little to no collections, no charge-offs, having a good variation, like a good credit mix. So being able to show that you have installment loans as well as revolving debt, no delinquencies or judgments or tax liens, pretty much just having like a clean credit report, payments on time, high credit score. To me, that's like the ideal credit profile per se. Is it better in the long run to go for a 15-year mortgage or 30-year if you have mediocre credit and student loans? Okay. So I would say if you have mediocre credit and student loans, to go with a 30-year, because it's going to give you a lower mortgage payment, and that way you can use your income to pay down your student loan debt. Also, if you have mediocre credit, it's going to be harder for you to qualify for a 15-year, especially if your income isn't really high. So I would say a 30-year in that case. Please stop the die. If you're married and one person's credit score is better than their spouse, can the spouse apply for a home loan alone and add the spouse to the deed? Yes. If one person in a marriage has good credit but low income and the other has bad credit report but great income, who should get the home loan? So if we use your income, we have to use your credit. So it would just depend on, I guess, whose income is better, but hopefully their credit is not so bad to where you can't get approved. You kind of would have to make that decision based on which person is going to give you the best chances at approval. But you can't have it both ways. If we're gonna use income, we have to use credit. Is it true that in order to get a mortgage, your score can be a 580 now? Yes and no. So typically for an FHA loan, the credit score qualification goes down to a 580. But right now with COVID, most lenders have COVID overlays, what we call them. And basically they have put extra rules on top of the government guidelines to minimize risk to them. So now you need to have at least a 640 to get that same loan. Eventually, I think they will remove those COVID overlays and it will go back down to 580. But in general, with my clients, I tend to only work with clients that have at least a 620. And if you have lower than that, then usually I'll advise that you get your credit up first, just because if you buy a home at 580, the process is going to be more daunting. The pricing is going to be worse. You're not going to get the greatest rate. So it's really better to have a score of at least 640, especially right now. Is it possible to obtain a mortgage straight out of college with a new employer? Yes. How difficult is it to obtain an offer letter mortgage loan? It's not hard at all. If you have an offer letter and you're working in the same industry for which you got your degree in or went to school for, then you don't have to have 2 years history, and we can use an offer letter from your employer. It's not hard at all. I plan to use my VA home loan within the next 5 years. I'd love to know how the VA home loan interest rates work. I hear that it's a fixed rate regardless of my credit score and that I don't have to pay a down payment. I'm not sure how true that is though. Great questions. Okay, so VA home loan interest rates work the same as any other interest rates logistically. I think you may be asking how are VA rates compared to other loan type rates, and VA rates are really good, especially now. The government always tries to take care of veterans, so you can usually get a pretty good rate on a VA loan, as well as you don't have to put any money down, so that is true. Okay guys, I am back. My battery went dead and it's like 1 in the morning. I'm so exhausted, but I want to get through the rest of these questions so I can get to all you guys' Instagram questions. I've been working in the same field for 5 years, but I just changed jobs in a new field. Would that disqualify me from an FHA loan even if I meet every other criteria? Great question. Yes, it would. No matter the loan type, no matter what other qualifications you meet, you have to have 2 years employment history in with the same employer or in the same role, position, or industry. The only exception to that is if you were in school and you are now working in the same field that you went to school for. But otherwise, yes, that would disqualify you. Can you get down payment assistance on a conventional loan? You can get down payment assistance, but I literally only have one lender that does that, and I don't even know if they still do it. But I know that it's possible. You have to check with your loan officer to see if your specific situation qualifies and what's available. This person also asks, can a spouse get approved and not include the other spouse at all because spouse has no credit at all and lots of medical debt? So with the married situation, it depends on what state you're buying in. If you're buying in a community property state in general, you can use the credit and income of the spouse that has the better credit and income. But the spouse that has the lower credit and all the debts, you don't have to use their score, but you have to put their debts into your DTI in a community property state. So I know Louisiana's community property, Texas is community property. Some states that aren't community property, I don't think Alabama's community property, or Mississippi. Now, there is an exception. Sometimes we can do what's called separate property, meaning that we only do the loan in one spouse's name, use only their credit and only their income. But I only have one lender out of the 20-something lenders that I have access to. I only have one lender that will do this. So whether we can do that or not depends on if they allow your state to do it and if you qualify for all the guidelines that go along with that particular lender that does separate property. So to answer your question in general, yes, that is possible, but it's only possible in certain circumstances. So that's something you have to check with your lender on to see if you qualify for that. What is a good annual salary to have with little to no debt to be approved for a decent loan amount? I wish I could answer this question, but that's way too general. It's way too general. What do you consider a decent loan amount, I guess, is the first question. It's too general. That's the one question I'm not going to be able to answer because it's vague. I don't know what you consider to be a decent loan amount. You're saying little to no debt, but how much is that debt and how much is the salary to go with that debt? I mean, there's too many unknowns in this question. This is one of the reasons why you have the approval process in order for your loan officer to go through your credit and calculate your DTI, calculate how much you're approved for. But I would say in general, if you have a really good salary and you have little to no debt, you'll likely be approved for a decent amount or the amount that you want or close to the amount that you want. But being that I don't know any of these numbers, I couldn't tell you for sure. Are you licensed in Georgia yet? Almost. All my paperwork has been going through and I'm just waiting on the go-ahead. Can I get approved for a mortgage in another state before I live there after I retire? Yes, as long as you are moving there and you're gonna, live in the property, if it's gonna be your primary residence, definitely. How do realtors feel about working with NACA loans? I'm not familiar with NACA, so I could not say. What kind of assistance can a single mother get for buying her first home in Georgia? So I don't know of any down payment assistance that's targeted to single mothers, but there are down payment assistance programs available. I do have a video where I talk about down payment assistance, and so I will link that below. Does closed credit cards on your credit report hurt your credit score? If so, how do you have those accounts removed from your credit report? Thank you. Closed credit cards, they can hurt your score. It's dependent upon how long you had the credit card, what your limit was. How do you have those removed from your credit report? I mean, unless you are able to come to some kind of agreement with the credit card company and they agree to remove it, it'll stay on your credit report for 70 years. Do you and your spouse need the same last name to buy a house? No. How do student loans affect your approval chances? I have covered this in a video. I'm just gonna list my mortgage playlist below, and that way those questions that I've answered in other videos, you guys can go back through and watch, and maybe it'll answer some of your other questions. But yeah, that is all of the questions from Instagram. I literally went through each and every question. I'm so proud. I was determined and I did it. It's like 1 something in the morning and I'm exhausted, but I hope that that was helpful for you guys. Yeah, if you guys have more mortgage questions, leave them in the comment section below. Do not send them through DMs on Instagram. That's not where I answer questions. put them in the comments below. Or if you are buying in a state that I cover, you can send an email to my work email. That information's in the description box, as well as what states I cover. Hope that was helpful. Thank you guys so much for sending in your questions. Do make sure to subscribe so you can be a part of the Honeybee fam. Hit the bell button for notifications so you'll always know when I upload. YouTube does not notify you anymore, so you need to hit that bell button so you can make sure you don't miss any of my videos. Hit the thumbs up if you learned something and this helped. It's helpful for me to know what helps you guys because I can make more. And stay tuned because I'm going to do another Q&A based solely on YouTube questions, YouTube comment section questions. I love you guys so much. I love you to the bank and back, and I'll see you in my next video.